Hello, I'm your host, Mike Gelb, and this is the Consumer VC, where we discuss the intersection of venture capital and consumer innovation. The show is brought to you by Propeller Industries, which is the leading strategic finance and accounting partner for venture stage companies. I know this is free content, but that doesn't mean I don't have a favor to ask you. If you're enjoying the show, please subscribe on YouTube or whichever platform that you're viewing this content. And if you really love it, I highly recommend checking out the newsletter at theconsumervc.com, where you'll receive an email of all the latest deals that are happening around the consumer each week. And you'll be the first to know when a new episode drops. Our guest today is Bryan Kim, who is a partner at Andreessen Horowitz, also known as A16Z. A16Z is one of the largest venture capital firms in the world. Bryan primarily invests in consumer and app layer AI companies and serves on the board of Partiful and SnackPass. He's also a board observer at Captions and 11 Labs. We discuss how he went from investment banking into tech, his years at Snap during Snap's hyper growth years, as well as what single action on Snapchat became sticky with users, the future of consumer tech, and of course, AI, what consumer social use cases are still unmet, and will glasses be the new smartphone? Before we get to Bryan, the content here is for informational purposes only and should not be taken as legal, business, tax, or investment advice, or should be used to evaluate any investment or security and is not directed at any investors or potential investors in any A16Z fund. For more details, please see a16z.com/disclosures. And on that note, here's Bryan. Bryan, thanks so much for joining me today. Happy Friday.
Happy Friday. Great to be here, Mike. Thanks for having me.
Really appreciate you coming on the show. So let's start from the very beginning of your career. Why did you transition and how did you transition from investment banking to tech? Why tech? What kind of grabbed you about technology?
Why and how? Okay, I'll do the why first. How is easy. The why is that towards the end of my banking career, which was 9 years, investment banking, 9 years, I did it 8 years too long. There's so many smart people out there that do 1 or 2 year and get out. Good move. I did 9 years when it was time to move out. It was during financial crisis and there are a bunch of things going on. I was happy to have a job, etc. Now, the fun thing is I got to work on a few companies towards the end of my banking career. One of them included Alibaba, which at the point...
What company? I haven't heard of it.
Yeah, by the time it went public, it was the largest IPO in human history. So that was, 2 to 3 years in the making. A lot of work involved, a lot of nights and all that. But what was really, really different, Mike, was the founders. It was the founders. This company, their sort of goal was to say, and this is the founders actually saying it, look, our objective is to lift 2/3 of Chinese population out of poverty or above certain line of economic certainty using logistics, finance, and commerce. That is ballsy. They're very, very, very ballsy and giant goal. And in my view, the company largely succeeded in sort of delivering against that goal. And that's when sort of my mind was like fully open. I was used to working with companies that are, still really meaningful, but at a smaller scale of, let's deliver these ad tech products really thoughtfully. Let's deliver, all these different products to users and what have you. But here we had founders who were thinking about in terms of hundreds of millions and billions of people and really impacting their lives. So I sort of looked at that and said, look, like I want to work. I set up my professional mission statement then and there. My goal in life, professionally, is to work for or work with people like this. That is all. That is all I want. And that's all I want to do in life. And that continues. This is, 10 years ago or 10 plus years ago, and that goal continues. Now, what that led me to think, Mike, was, okay, how do I do that? What are some of the companies or products out there that really resonates with me that I think can really change a lot of people's lives? And maybe this was a little contrarian back then, but there's a little yellow app called Snapchat. It was overlooked by investment bankers. They're like, oh, like Facebook is great, WhatsApp is great. Like, what is the yellow thing that like, who cares? But what I understood, Mike, was that Snap in the prior, like maybe a year or two, consistently stayed at like not top 10 app store ranking. What I understand in my dumb brain back then was that's hard. That is really, really hard. And what that means is that whatever people actually think about this product, it is really meaningful for a lot of people. And so you asked, like, how did you move to sort of tech? Was, the simple answer is that I begged. This is my answer for a lot of people who are looking for jobs. Like, go beg. Like, don't have ego. Just go beg. However, beg in a thoughtful way. Don't say like, "Can I pick your brain? Can I join? Can I like? Here's my resume. Please hire me." It's not. There's probably, you think there are 100 people, 10 people do that. They take the initiative to do that, and that's differentiated. That's helpful. My version of begging is actually try to understand what they're thinking potentially and try to add value. So, like what I did, Mike, for 10 weeks, and I sent this every week, once a week. I looked at all the things that are happening in the tech industry, like whether, oh, like this company is launching this product or that's happening. And then I said, and that this is what it means for Snap. And I did that every week for 10 weeks as a summary. Like, I'm a banker. I don't really know much about operating, tech companies internally. It was like 100 people back then. What do I know? Like, what do I know? And so it was more like, hey, like, I don't know much, but here's what I can add. I do see a lot. And this might be what it could mean for you. 10 times. So the 10th week, I send out that letter again. Like, I'm not getting responses, by the way. 10th time I sent out a letter. I'm like, please, I'll do anything. I think my exact words were, if you think the most value out of my, skill set or expertise is, janitorial services, I will do that. Please hire me. And after 10th week, they write back and say, we don't know what to do with you. Your skill set is not useful to us, but it's interesting. Like, I don't know why you keep reaching out. This is interesting. Come meet us. So I fly out to Venice, California from New York, and after the first interview, again, very positively, I put down deposit in an apartment right away, and I think I'm getting the job, and that's how I moved into tech.
Wow. That's amazing. And I love that. I love that persistence. The first episode actually we had on Jay Kapoor, who runs a fund, and he said that originally in his earlier career he wanted to break into the NFL and work in finance of the NFL before he was a VC. And he literally just emailed HR every week. Hey, how's it going? I love though that you were set and finally got an interview from that, and then ended up working in the NFL for a few years. But I love that you were also trying to kind of add value, or like this is maybe this is what's going on in this world, and then figure it out.
That's always my advice for a lot of people who want to get into tech. I'm like, what about this job? What about that job? Like, look, like 100 people out of 100 people, 10 people are going to send that cold email. That's really good. That's awesome.
Yeah,
One out of that 10 people, or if not, nobody is going to actually try to send
follow
like,
up.
oh, like, you might be thinking about this market. Here's my view. And if it's somewhat thoughtful, people recognize that. I think you took time out of your day and you actually added value to like the thought process. And I appreciate that. And I'll talk to you. And that's how you become 1 out of 100 in my mind.
So at what stage of Snap, when you joined Snap, where were they at that period of time? What was the main focus?
I think main focus was product shipping. I joined right after the story product launch, which changed a lot of the consumer landscape. The story products in LinkedIn now, so that's good. It was before Discover came out, so like some ideas around how to actually serve publishers. It was very much in the innovation curve set. So it was a lot less about like, oh, we got to operationalize XYZ. It was much more like, oh my God, there's net new ideas every other month. How do we actually ship these? And the growth was happening so quickly. So it was more around just holding things together while you try to bring in good people in the company. So when I joined, it was, I want to say 150 people pre-revenue. I think average, age of the firm was 25 maybe. And again, like very, very fast growing company, was high velocity in terms of product shipment. So the focus, I want to say, was really on shipping products.
Got it. Well, what did you learn? Because you came from the investment banking side, and taking companies public, and kind of understanding financials. What did you learn about as an operator, learning actually how to monetize a social platform in Snap, as an operator?
What did I learn? I've learned a few things. I think one is that the tip of the spear isn't necessarily monetization. So like what I understood was, look, at the end of the day, I used to do finance. So like what is finance in a very high margin business, software business like Snap, right? If you think about software business, these tend to be like 80, 90% margin business. Okay, what does that mean? That means the cost curve isn't that important. It's just not. It's like 10, 20% of your revenue. Like like who cares? Like you going around saying we need to save costs here and there and like improve our margin from 80% to 82%, like whatever. I think the much more important thing is how do I actually grow revenue and what does that mean? Where does the revenue come from? Well, in the world of ad, is actually, is pretty. It's an equation, right? You get people to love your product, so they spend a lot of time on your app. What does that mean? Well, that means a lot of attention, and your eyeballs are on these like sort of inventory, digital inventory that you have created. Okay, you're gonna sell X amount of that inventory at Y price, and you'll have Z fill rate, and that's how you're gonna make money. Therefore, if you think about, you track back what's important. And even within Snap, I've actually moved from the finance team, building the team from 1 to 70, taking it public, et cetera, to actually growth. And one of the things that really made me do that is I understood the tip of the spear of a product like this is actually user love, user growth. Because if you don't have that eyeballs, if you don't have that time and attention, your inventory, that sellable inventory to fill the ad, just drops, and the value of it drops, right? If your product is less important. So at the end of the day, the way I thought about this was like, okay, within a company, high margin business, therefore revenue is probably the most important. Revenue actually flows from the engagement or retention and the growth that you have with the user base. Therefore, catering to that and really helping that is one of the most important thing in a company like this. Now, there are two different ways to do it, I think, Mike, and I worked on more the operational side, if you will, of making sure we could systemically address this. But really, the genius of companies like that is innovation. When you come out with net new consumer behaviors and products that they weren't really expecting, I think that's where you really see, like, step change growth, step change in like all the love and sort of almost zeitgeist as well that people are expecting. So my learning from, as you asked, like what have I learned, is that innovation reigns supreme, velocity of product reigns supreme, and then customer love, if you can capture it, you can find a way to make money.
How do you measure maybe on the customer love side, and also what kind of metrics are you kind of most concerned in about? I know I've heard, for example, Sarah Tavel talk about her time during Pinterest and how what they really kind of shifted their focus was from monthly active users was to actually who actually pinned, because that was kind of like the one action, for example, that really drived people kind of coming back and back and back to the app. And once you have a person pin for the first time, it's very, very likely that they actually come back and actually reuse. Was there in when you joined Snap, it seemed like there's already different kind of products. There's obviously story. There was kind of different obviously features that were being built out, which of course that's what you want. How do you kind of also balance what kind of the core metrics you're actually tracking and making and kind of optimizing for to kind of show that there's consumer love or tracking consumer love versus as well, new product features as well?
That is such a good question, Mike. And this was not obvious initially, because when you say growth can come from many things. Growth can, at the top line of daily active users or user count or what have you, it can come from a lot of things. And I'll sort of bifurcate that a little bit. It took us a while to understand, why are we growing? And it sounds simple, like, why are we growing? Why is our product useful? Why do people love our product? Sounds simple. I'm like, it's for sure because it's innovative. For sure it's because it's cool. For sure it's because it's surface level type adjective. I think when you think about and you sort of ask, like, what are some of the ways to understand customer love? And I think they're different per product and what it's trying to do. Since we're talking about Snap, I'll sort of talk about Snap, but of course, like the metric that I will look for and try to understand will be different for different products. So for Snap, it's interesting. There's a world where people thought of it as like a large scale social platform, and if you take that view, then growth is probably the most important, and you just care about DAU and how to grow. Now the thing though is, what we understood was there are two different type of growth. There's growth led by people who are coming in through viral factors or creative tools. So I'll give you an example of Coachella flowers or puking rainbow dog ears. These are fun. Like they weren't available before. And I know they sound very silly, but technically very difficult products. So I just want to say one thing Snap did phenomenally well is wrap these really complicated technical products into a pretty dumb sounding thing. And so like one of the things, Mike, that I always talk about is like you know, a jelly bean theory, where a gummy bear theory is where, look, like if you think about a very amazing technical product, let's think about it in a vitamin terms. Like I have concocted the best way to create this a beautiful, vitamin that is really helpful to people. How do I get people to take it? Well, I can put in a giant brown pill for people to swallow that is hard. And somebody sort of along the way figured out, you know what? I'm going to put that in a gummy bear. And once you put it in a gummy bear, adults have it, kids have it. It's like so easy to consume. And I think that's like one of the things that Snap did really well of like understanding deep technical, aspects of different product or technology and then wrapping it into a gummy bear. Either way, we have wrapped that gummy bear and put it as a lens, and you show it as a very net new, cool, creative tool product. And we grew really well from that. The thing though, Mike, is that the retention from people who come in primarily use a creative tool and post it on other platforms and look at themselves, what have you, weren't that retentive. And the reason is, despite thinking Snap as like a social platform, in reality what it was a close friend communication platform. And the communication can occur through pictures or text. And what was special about Snap was the fact that you send a picture that disappears. And so after many, many years of, having been built on top of that, core product, what we actually realized many years later, Mike, was that the most retentive thing that people can do when they first join is add a damn friend and send them a snap. And then any other gross that like, oh, came in to use a lens, came in to play a game, came in to see a Discover article. That ain't it. That wasn't it. Because you could get that value from elsewhere. What you can't get elsewhere was sending this disappearing snap with friends and feeling close to them and feeling a belonging. So at the end of the day, similar to what you talked about in terms of how many weekly active pinning was happening versus MAU on Pinterest, our version was, hey, when a new user joins, did we get them 5 friends? And did they snap with each other? That was it. If we got that right, they will be retained, they will like the product, they'll use other, surface areas of the product and continue to grow with us. But if we don't get that right, it was on a very shaky ground.
It really just goes back to what the initial use case is for the app or platform that you're actually building. Because that was the initial use case for Snap, right? As a communication platform. So,
And maybe use case is one way to think about it, Mike. And I think the other way to think about it for me is like, what is the emotional thing it's trying to really deliver for the consumers, their customers, right? It's trying to make sure you feel close to your friends, that you can express yourself to the friends. There are other things that sort of adjacent to that, but again, going back to the core product, that's like at the end of the day, that was the most important thing.
what's also interesting is just when I think about Snap, I think of all the different kind of features and things you can kind of do with it. But I do find it interesting how it kind of goes back to the start from the beginning in terms of what to actually measure, what's at, what's actually working, or that introduction or that introduction that then gets people to use.
And you'd be surprised, Mike, when you ask founders like, why do users use your product? One simple line question. You'll be surprised as to how many times you hear like some combination of many things where they say, oh, like this is why A, B, C, D, E reasons. But at the end of the day, typically, products that do really well do one thing or a few things very, very, very well. And founders who understand that clearly and want to deliver and, position to deliver against that value that people are looking for tend to do well.
So I'd imagine that, I mean, shifting gears a bit to, as an investor on the A16Z team, I guess when you're actually going and actually talking and you're actually looking at, maybe AI companies or, consumer tech companies, it seems like they have to deliver at least one strong use case in terms of reason why they exist for you instead of maybe a dozen reasons. Is that roughly right?
I think that's roughly right. That's roughly right. I think the companies that we tend to like are the ones who are solving something, an emotional need or a problem or a work problem, something that customers are looking for a solution for.
This episode is brought to you by Propeller Industries. If you run a high growth business and you're focused on profitability, extending your runway, and improving your operational efficiency, you probably need a finance and accounting whiz that will grow with you. Well, instead of hiring someone full time, what would be cost effective is working with Propeller Industries. Propeller Industries is a leading strategic finance and accounting partner for venture stage companies and has partnered with over 1,000 startups and high growth businesses across consumer products, consumer tech, and enterprise. Some of the brands that they've worked with are Liquid Death, Olipop, Hims, Farmer's Dog, Away, MoviePass, and Giphy. Propeller also provides specialized support for fundraising and M&A with transaction advisory services. Propeller's TA team of former investment bankers and investors can step in on more of a project basis when pursuing full-scale financing and M&A. There's a link to Propeller Industries in the show notes if you want to learn more information. Can you give me an example in terms of what's a real kind of problem that's solving for versus not? Because when I think about the world of AI, there's a lot of people that talk about how we're back in the 1990s, the dot-com boom, and just because you maybe had a dot-com back then, you may be able to raise money, and just because you have AI in your name, maybe you're able to raise money. But it seems like there's also a lot of noise then, just like there was back in the 90s, when it comes to AI. How do you think about that in terms of what's actually could be real, could a value that actually, a company that is actually solving a problem and is providing value versus the noise?
Yeah, I tend to think of it in a few ways. Like the current crop of AI companies, I would put this in few categories. I think category number one is what I would call witchcraft, and I call it that because some of these products are magic. The fact that you can prompt a tool like Udio or Suno to create music out of thin air, that's incredible. The ability to prompt an image to generate a profile, Pixar like profile of me with at no cost. That's magic. So I think what you're like category one of like what are some of the real companies is that well these actions and use cases were just frankly very simply put not possible before at all. And I think what comes with that is a category of new behaviors. So I'll give you like quick example of this like witchcraft type thing where look, there was a time where there was an article written about one of our articles, and it was critical, and I was like, oh, like how I wonder how what the best way to clap back would be, and I didn't end up doing it, but I as uploaded the said article into ChatGPT and said, give me a clapback article in a rap style, and give me the lyrics. It gives me lyrics. Copy the lyrics. I paste it in Udio and said, give me a West Coast hip hop rap style using this lyric as a diss track. And I did this during the heat of Kendrick and Drake. So I think I was a little affected by that. But it gives me this amazing complete like rap that complete with cover image and like the lyrics were just so on point. And all of a sudden I have a 3-minute rap song, Mike, that prior to this, I would have no way of generating anything like that. But what that did is all of a sudden, I'm not viewing music as a piece of consumptive unit that I'm going to enjoy listening to while I'm on a run or something. What I used music for then became an expression. It became almost a dialogue. I was using it as a communication tool. So all of a sudden you have this ability where because the products, net new products are creating these magical experiences, it changes the end output, let's say music, like 3-minute rap song, into an art to be consumed to I'm going to use this to communicate. So if you and I are having beers and you said something funny, technically in like a few minutes, I could write like a giant song that is hilarious to in our context as a clapback, which I think is a very interesting use case. The second thing I would say as a category is like you asked like are there real problems that our users are trying to solve, and I would say yes. If you think about the likes of captions or photo room of the world. These are products that actually take, you and I mean, my background right now. You see this like shelf. I don't like the shelf. I wish the shelf wasn't there. And that's my problem, right? Like I want to look professional. I want to sort of have this like good background, whether it's image or video. These product immediately takes that away. It immediately, deletes it from the photo. And as we're talking, we can actually capture this, and you have this like little caption going on the bottom, so that it's so easy to consume for people who are on mobile, because half the time mobile sound off. These are real problems that products like this are solving with ease, and sort of really help the efficiency of the creator by 10x, if not more. So I think you're seeing real products that are delivering tremendous value, and really delivering like 10x plus, saving in time, effort, and money when they do that. The last one I would say, there are products that are starting to build out sort of a moat that is very interesting. And these moats go back to the classical differentiations of business models. And I would just give one example where there are companies like Hugging Face or Civit.ai, which acts as like a hub, if you will, for either various different models that are coming out, or fine-tuned image models. What does that mean? Well, that means these places are becoming a de facto place where these models live, for whoever wants to use it, whether users, the developers, can go access. Therefore, what you start seeing is this like marketplace dynamics where they're starting to corner supply of a very specific type of resource, if you will. And on the other side, the demand side are forming, and this becomes a marketplace where you start seeing this sort of classical moat of, oh, they're building a network effect. So I think even in the age of AI, where people are sort of easy to dismiss, oh, these are like cool new things that may not have staying power, we disagree. We think this is fundamentally a different technological shift, and we're seeing the classical moats that apply to tried and true businesses that are forming in the new companies as well. And if anything, I'll just leave you on one thing where, if you look at Stripe put out a report where they looked at sort of the growth in revenue and billing, if you will, between Gen AI companies and the old school sort of SaaS companies. What they reported, AI companies are growing faster than SaaS. And so what that means is that there's a real use case, there's real money that is being made in sort of the net new companies from monetization, engagement, willingness to pay.
I'd love to dive into moats. So, from what I understand, Hugging Face, that's more on the infrastructure side for AI. Is that right?
That's right. That's right.
Um,
The founders started as a consumer company that like pivoted into infra. Yeah.
okay. So how then do you think about moats when it comes to like consumer AI companies? And what does that actually look like for you when it comes to building big consumer AI companies themselves?
Yeah, I think there are a couple things. Like we said, there's a classical sort of marketplace dynamics, and there are companies you can sort of squint and see. Oh, you can really corner a certain set of supply, if you will. Let's call that net new models that are coming out for Hugging Face, or net new image models that are coming out for Civit. And if it all lives in a certain place, then if that's the use case, you just go there. So I think that's like one example of classical marketplace dynamics that we're starting to see in sort of AI companies. The other one I would say is sort of workflow almost. And this sort of weighs a little bit into, the prosumer world. But because these products are so magical and useful, what ends up happening is people start to do a lot more on it. And when you do a lot more on it, let's say I started creating most of my videos or images through a certain specific product. And what it does is starts to build out, one, my library and my history of all my body of work, if you will, part one. Part two is, if the company is thoughtful, which a lot of our companies are thinking through, how do I actually make it easier to export that? How do I make it easier to distribute that? How do I make it easier for customers to do what they actually want to do, whether it's distribute, monetize, or create? And the more parts of that workflow they own, the more essential the product becomes to their lives. And therefore, it becomes really, really hard to rip it apart, rip it out of their life. So I think, you know, incremental ownership of the larger workflow of what they're doing as part two of how I think about sort of moat. And third, of course, there is of course, there's like this idea of memory or idea of, experience that you have built. So that sort of maybe applies to companion use cases or mental health use case or any other use cases where the more you interact with something and the more it's harder to, replace it. So Mike, I'll give you a quick example where maybe this is a strange example, but I write my journal in Apple Note app every day. It's, 2 to 3 pages long. What I do with that is I copy it and I paste it in ChatGPT. And I say, remember this. This is my journal. And so at this point, ChatGPT has like a 500 pages journal on me, on my deepest and darkest thoughts and secrets. And I ask it questions like, hey, I had this happen. What do you think? Use examples of things I told you already. And that's like sort of a very difficult thing to replicate because now it has 500 pages of documents on me where I'm asking specific questions about myself and it's giving me very specific examples that I already gave. I'm like, oh, like that, this must, be similar to the situation like 2 months ago when you did X or when you went through X. That's incredible. And it starts drawing all this parallel. And like, that's something that I'm not willing to, change. So I think there's a habituation and memory aspect of AI company that is slightly different from prior products.
Yeah, that makes a lot of sense. I mean, obviously, if you're building like a digital twin of yourself, then trying to replicate that digital twin into another, like the actual switching costs of actually trying to take the digital twin, put it on another platform, that would be terribly t- time consuming. So why would you actually want to do that those switching costs? And so you actually do have a moat there. Do you think that can you talk to me a little bit because we've obviously seen these huge rounds when it comes to AI companies. Seems like honestly they're like in their own world just in terms of how much money they're raising. Can you talk to me a little bit about some of the expenses that AI companies are kind of the reason why they have to raise such large rounds? And I know that LLMs massively expensive and takes off and are takes a lot of money in order to build them. Does every consumer AI company need to actually have their own LLM eventually?
I would just do a very quick, one liner answer on that. Like, no, no, I don't think they do. In fact, competing to try to build your own foundational model is very expensive. Like you said, the compute cost, inference cost to try to do that, not to mention potentially data cleansing and data aggregation costs for licensing costs can also be very high. So my answer is no. I think there are incredible open source models that are near basically state of the art that are coming out, whether it's from Llama or Mistral, what have you. So I don't think they need to build their own foundational model. However, what I would say, Mike, is that the slight difference that I see now in the age of AI versus prior is that before, these tricks is the wrong word, this like sort of ecosystem and technological baseline of mobile apps fairly well understood. And there was like some baseline. Therefore, the game, if you will, was more around how do I understand nuanced information? How do I understand UI and UX to really deliver and capture the heart and mind of consumers? I think that shifted a little bit in that even this week, right? Pika dropped the new model, BFL dropped the new model, OpenAI had a dev day, Google LM is going viral. There's all these new things that are happening that if you're not actually very technically savvy, and understand the underlying shift in the model level and technical level innovations, it's really hard for someone to want to build on top of it, right? If you're not aware of it, it's like hard to build on top of it. So what I actually am observing these days is founders with deep appreciation of the current innovation and the underlying foundational model layer, appreciation of that, and know how to translate those state of the art into their customer problems are really, really important versus, oh, I'm going to go build my own model because I have this preconceived notion of what it's going to do, and I'm going to incur tens of millions of capital to actually go train this thing, which, frankly, in 2 weeks, a larger hyperscale company can release, and you just may not know about it.
Got it. So yeah, so I guess it's staying in some level in your own realm of genius in terms of what actually the use case that you're doing and build it out in also a lot cheaper of a way, right? Because building your own model is terribly expensive. What do you look for when it comes to actually founders building AI? Do they have to have deep technical ability? Do they have to really kind of understand as well distribution and marketing? How do you evaluate teams?
I would, in the age of AI, I would say three things. It comes down to three things for me. One is, do they have an appreciation, an understanding of the underlying tech? And again, this doesn't mean they know how to build models. They're actually, or that they're researchers, right? Just means they know what's happening and they are, really fluent in the recent development of the technological shift that can affect their product. So part one is appreciation of the underlying tech. Two is velocity. Things are changing so fast these days. So I think I'm not sure if I would say gone are the days, but it's a lot more. The probability of success goes a lot higher. Becomes a lot higher when the founder is able to move very quickly because the underlying stack, the underlying tectonic shift of the platforms are changing so quickly that people who are more likely to succeed are the ones that understand that and move really quickly. Every 2 weeks, every 3 weeks, new product out, 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 and not everything will work, but that velocity when things are changing so fast, matching that velocity is so important. So I became a lot more appreciative of founders who have a tendency to ship faster than to really like sit and think of all the nuances to nth degree. And the last one I would say is you have to understand your customer base really well and understand their problem set. So those three things were a combo of appreciation of underlying tech, velocity, and understanding the customer problem set. These three things is what I tend to look for in founders these days.
What's the earliest that you would actually enter a company? Not talking about money wise, but more so about not even how much they've actually monetized. It might not have monetized, but in terms of number of users and even just understanding that there is there that they are actually solving. For you to get to conviction, understanding that they're actually solving a real problem and that customers are maybe realizing that they are or consumers are.
Yeah, that's a great question. Oftentimes, then this depends on partner. So I'll sort of give you my n equals one, like my own personal preference, where I tend to enter is I think I've sort of grown this humility that I don't know anything, that I can have all these opinions about consumer behavior. Oh, this should go well. This will work, etc. And I think time and time again, there are developments that I see that I don't understand. I'm like, huh? Like, why is that a thing? And I think it goes, like, to draw an analogy, I think, the older generation, when Snap came out and photo disappeared, photos was always meant to be commemorative. Like, why would you take a photo that disappears? That doesn't make any sense. Similarly, when I now think about, some of our, the children of my partners, they now have this behavior where they're doing schoolwork and they're on Discord or chat groups, what have you, and it's all their friends, and they have 2 to 3 bots in there, just hanging about, talking back and forth. They're contributing to the conversation. Mike, why? I can tell you right now that I don't fully understand why. Like, I don't really get it, but it doesn't matter. It's happening. Like, that's what's happening. People will do what they do. So my job is to observe. So Mike, when you ask when is the earliest you would play, I like to look for some statistically significant number. And that means if you're a very extroverted founder, maybe you have 100 friends. And you ask all your 100 friends to use the product. And when you're raising a fund, ask them to say, log in every day. Please spend 30 minutes each day so I can like juice my metrics. What I tend to think of like this like non-gameable, statistically significant number is probably in the low hundreds that, the product is no longer used by just your closest friends. It's sort of out there. It includes, random people that would act more like normal customers. And then from then on, I try to tease out how people are using it. So it doesn't need to be thousands or hundred thousands of user base, but it does have to be some number where I feel it's representative of a larger group of people that you're trying to address. And that's when I would typically play.
That's still pretty early. So how as well when you have some of these companies raise, pretty significant rounds, and of course, um, and some of them, as you pointed out, you maybe don't need to actually build your own LLM. Actually, maybe it doesn't make sense at all to build your own LLM. Where do the big expenses then lie when it comes to actually scaling some of these on the A's on the AI companies? Where do some of like the biggest expensive come from?
A lot of the AI companies, they're structured. And this is like old CFO in me coming out. I
Yeah,
used to be a CFO before A16Z, and you know, it all comes down to some extent like a margin structure. A lot of the AI companies that we're talking about have a naturally high margin structure,
right,
80-90%. So what that means is that most of the cost is sort of similar to the traditional cost structure of SaaS companies, whether it's compute, cloud, or people. One of the largest cost center for our companies is really building out the team that can ship the product. It's the product people. It depends on the use case, but you may have research folks, engineers. Oftentimes, we do see companies that are sort of earmark some amount of capital to really distribute the product to grow through acquisition or paid acquisition motion. But the truth, Mike, is that most of the I don't want to say most of the companies, a lot of the companies that I see and are really big fans of, a lot of them haven't touched the actual capital raise because AI actually, the product that these companies are delivering are very, very useful. People pay for it, high margin, and therefore, more often than not, what I'm seeing right now, Mike, is that these companies are operating at a way where they're purposely running thin to cash flow break even. So they're not making money sometime, most of the times, but they're not really drawing down the capital that they raise.
right.
And that's the type of thing that we see where they're thinking about company building in a very enduring way to say, okay, here's my margin structure. I'm almost net burn zero. I can sort of invest more in growth. I can invest more in people based on the growth potential and what I want to get to in the next stages of the innovation curve. And these are typically the companies and even in the AI world that we get most excited about.
Want to shift gears a little bit into an area that I know is very deep in a very deep love to you, consumer social. I know that Andrew Chen tweeted out and also he wrote an article about how there won't be these big horizontal ad based consumer social apps anymore until maybe there's a new platform shift, which I definitely want to also talk to you about that. But and that now we're seeing a shift that that the future of social is more geared towards vertical subscription apps, and how that's maybe the only way to win. What are your thoughts on this in terms of the future of social as it regards to some of the up and coming emerging companies?
So part one, I think it's certainly more difficult, right? Because in this world where large products like Instagram or Snap or Pinterest or Twitter or TikTok has sort of carved out their own areas, it's like fairly harder for a net new company to enter. And it's also a factor of look like time spent on mobile are limited. I think we're all sort of spending almost the maximum amount of time that we would spend on mobile products, and not spending time on something just or spending time on a net new thing just means you're spending less time on the other things that are also really really useful and fun. So one, I think it is harder, but two, I would look at it this way, and this is how I look at the social scene, if you will. Social products are not one thing. They're largely two categories in my mind. One is interest graph products, where you don't
Hmm.
need to be connected to people. Like TikTok, I don't know anybody, and it's still really useful and amazing product. Discord, don't need to know people. Yeah, if you have friends, that's great too. But you go into where you want to. Same as Reddit, Twitter. Like I don't know most of these people, but I have like these interest graph products that are eminently useful to me. The other, I would say, is what I would call friend graph products, and these usually start as a friend product where you're connecting with people. Facebook, Snapchat, Instagram all started like that. The thing, Mike, that I tend to think about in this friend graph category, what I would call like interest graph category, like there's TikTok of the world, and it's just very, very hard to compete. It's so addictive and so fun, and so it's harder. On the friend graph side, look, I think the truth is, if you look at the average number of friends on each of these platforms, whether it's Instagram or Facebook or Snap, I can pretty convincingly tell you that this is way, way, way larger than your actual close friend group.
Right.
So, for someone on Instagram with like 500 or 1,000 or 1,500 friends, like, is that really, the close friend? And the graph that you have, and they're these platforms making changes to add that green circle instead of a, close friend circle versus not, and to like really help that. But the truth to the matter in my mind, Mike, is that there is no close friend graph product still that people use. And people crave connection. They crave a sense of belonging. They crave being able to share and express their feelings and sort of communicate with their friends. And if you think about where this is happening nowadays, it's like really messaging apps. They're happening on iMessages, group chats, what have you. But just because it's happening on group chats doesn't mean that there's a close friend graph product that really deserves to be the crown jewel of like the new social category. So I am still of the mind, Mike, that the close friend graph throne is up for grabs. It's up for grabs, and there is a world where that can be built.
I remember there were like a couple that popped up that, I mean, I'm sure way more than a couple, but uh that were in that space, but weren't able to make it. But that's actually really interesting. So there's still opportunity, you think, from a horizontal play, that for like a close friend graph social product.
That's my view.
Yeah, I mean that makes sense. I mean, right now, how I typically communicate with a lot of my friends, it's all through like WhatsApp. It's all WhatsApp groups and that sort of thing. And so, do you actually have a way that's actually where you actually have real profiles of people that you actually that are actually, it's like the early Facebook,
Yeah.
what that used to be, when it came out. Could you actually have that again? So, because Facebook right now doesn't really solve, I would say, that,
Yeah, I
but
mean,
it's kind of fun.
my sort of understanding of the technical or technological world is like history rhymes, and it has like some sort of cadence. So like maybe we go back to a place where there's like a MySpace where you have your identity or your interest as a profile. Don't know. Like I again, like similar to what we talked about. Not going to pretend I understand what it's going to look like, but I do think there's a lot of vectors that are interesting for this type of product to arise.
What do you think will be? Of course, in the past 2 weeks, we saw, which I know Meta had been working on for a while, and in partnership with Ray-Ban, but their AI, release Orion, their AI glasses. Do you think? Well, what do you think will be the next computing platform, maybe after the iPhone? Would it be glasses? Would it be goggles, something a bit thicker and maybe not as much ease of use? Would it be something in that realm, or are you thinking that it could be something completely different?
Man, I think maybe this is a controversial take. There are more of mobile devices than humans out there. And when we say next device, next platform, I'm very, very excited for that and for what that could be. However, I also understand the time and effort it may take to replace, again, 7, 8 billions of these things out there. So I think the distribution is so, so ubiquitous that I still think the main platform will continue to be mobile. Again, glasses is a very interesting form factor. Um, so are watches. So are all these wearables. Um, would it get to penetration that we've seen with mobile? Would it over time function completely separate from that? I'm of the view today, Mike, that it's going to take, I don't know, maybe a decade plus for that to change.
So, do you think, in terms of glasses, it might be more of like an iPad, where it's like a nice to have instead of a main computing platform?
It's funny, the glasses. I don't know if you're a fan of this. I'm a nerd, so I grew up in Dragon Ball. And there's a Scout. There's a thing called Scout that like enables you to see people's energy level and like HP, which is kind of fun. I think about that a lot when I think of glasses, where not everyone wears glasses. It is very, very useful, but not everyone wears glasses, just like not everyone wears watches. Um, I think it enables very unique experiences. And over time, whether it's spatial or visual in front of your eyes, or being able to real time translate in different languages, et cetera, I think there can be very, very amazing specific use cases. So I think over time, the way I think about it is that it'll sort of settle in couple use cases that are really, really helpful. So I tend to think of the watch as like two things. One is that it's a notification device on your watch that enables you to, non awkwardly check emails or whatever while you're with someone. Part one. Part two, health. Like that's what it's for. In my mind, those are the two main things. Now, for glasses, again, I don't expect to know what it's going to be, but I think there is an incredible power in what I would call dismantling of Tower of Babel, right? Like in Bible, like God created Tower of Babel to like split the humanity and say like you're all gonna have different language and culture and like not gonna understand each other. Like this type of the underlying AI technology loaded up into like a form factor that's always on your like ear and mouse level could enable complete it sort of the dismantling of Tower of Babel. Now I can talk to you in any language. I can speak in Korean and you'll understand, and you'll speak back in Roman and I'll understand, and what have you. And so I think there would be specific use cases that arise out of like the Orion type form factor that would be incredibly useful, incredibly well adopted, and very, very interesting. And those are the use cases and product that get built on top of it that I'd be very excited to see.
Got it. But in terms of actually replacing, a mobile, it's more so from like a use case to use case, or more maybe niche, or more particular, instead of being ubiquitous.
I think that's right.
As an investor, what's one contrarian belief that you hold? And maybe it's this one, but what's one contrarian belief that you hold, that's maybe different to your colleagues at A16Z about the future of consumer technology or AI?
Interesting. That's a great question. It used to be contrarian that like you have to have a thesis versus like consumer you observe. Like I don't know, you just gotta watch. So that used to be semi contrarian. I think more and more accepted that we really don't know what's going to happen, so we just gotta watch. Uh, maybe the thing that I held was this, that in sort of products and consumer, maybe this applies to prosumer and everything as well as I'm always of the mind of prioritizing retention over growth. And what I mean by that, if there's two separate product that looks almost identical, one is growing really well but really like not great retention, and one is not growing at all but has incredible retention, I would much rather bet on the latter finding out a way to distribute, or the latter finding some hitting a lightning in the bottle and going viral on TikTok, whatever, and actually getting distributed, versus the former figuring out a way to make the said product much more retentive. I.e., I will bet on the product that has much more love and retention than strong growth and strong distribution.
That makes sense. I also, on this show, since it's all of consumer, I also have a lot of like food and bev investors as well that come on that will say kind of the same thing when it comes to retail strategy, where they would much prefer investing or looking at brands who might be only in one retail region, but their velocities are insane. They're so powerful, rather than across the U.S., but their velocities actually aren't that great, even though they have a lot more accounts, a lot more doors. Do you think in in this kind of age of AI, or the beginning of AI? When I say AI, like the LLMs, let's technology. Do you think that there's going to be new ways to actually monetize some of these apps, or is it going to be very kind of traditional, that we've seen so far, in consumer tech? With it could be through advertising, it could be it could be through subscription. Do you think that there's going to be new kind of ways to actually make money, through customers with these AI technology?
So, yes, at the end of the day, if you think about make money as where the money comes from, whether the customer pays or whether a third party advertiser pays, I
Right.
don't know if that changes a whole ton because we're just saying like either you pay or someone else's pay. Like, okay,
Right,
like,
right, right, right. No, no, yeah, yeah, yeah,
I
yeah,
think
yeah,
that's the same.
yeah.
But if you think about what is the character or what is the nature of the revenue stream, I think one thing that I'm actually quite intrigued about, Mike, is AI right now is in many cases so useful that it starts to, if you think about the historical thought process around, oh, like let's take SaaS as an example. I will, charge you based on seats, right? There's some licensing fee, and like every per person, I'm gonna charge you some dollars, and then you're gonna pay me that. And I think already we could see a world where actually forget seat because my product is so helpful that when you start using this, you'll be 100x more productive. So I don't want to charge you per seat because that's not a great deal for me. What I do want to charge is, hey, like if you actually make a lot more money or you end up spending a lot less money, I want some part of that. And I don't know how to account for that. Hey, but I want to figure out a way to actually account for how much value I actually delivered to you, and I want to cut of that. If you end up hiring 2 people instead of 20 people in a call center because I gave you my technology, I don't want to charge you for 2 seats. I want to charge you for the, some fraction of the 18
Revenue.
people you're gonna
Yeah,
hire.
yeah.
So like what is that? And like how are people thinking about the sort of outcome based pricing? And that can happen on the consumer side too. Hey, you saved, let's say you're a content creator and you spent 100 hours editing and doing all these things on video, and all of a sudden through AI that shaved to an hour. How much would you pay for that? And that subscription potentially, but also you could sort of based on the value you're driving, I could potentially figure out a way to get a cut of that. So I think there is a new way that you could imagine based on just how useful this technology is, that you can monetize in a slightly different way than before.
That's really interesting. The actually based on, revenues that you're creating or money that you're actually saved, and actually monetizing that way rather than just having, a flat fee or, as you say, one additional seat or what have you. But actually the depth in terms of what the product actually saves you on money wise. It's really interesting. My final question is, what's one book that's inspired you personally and one book that's inspired you professionally?
Oh, different. So one is personal, one is professional. Okay. I love books. This is great. By the way, if you love books, there's a product called Readwise that I religiously use, and I forget things, right? So you load books and you like highlight the books you like, and it gives you like a key phrases of the book daily. So like you're always like refreshed in terms of like the books you like. So if I think about the books that I have there on a personal level, I don't know inspirational is the right word, but I love this book called The Order of Time, and it's by Carlo Rovelli, who's a physicist. I think he's a I don't know, like some crazy smart physicist out of Italy, but he writes like a novelist, and he blends these ideas so well. And one of the reasons why I like it is just it's about time. And I think that's like the limited resources that we all have here. And, even as like an investor, like figuring out ways to actually use your time wisely is very important. And it just sort of highlights the relativity and the impermanence and the different definition of time versus like the static look at the clock and we have an hour type sort of way. So it's given me like a deep appreciation about the concept of time, if you will. So that's my favorite personal book. Professionally, this is a weird one. It's a weird one. So the book is called "When We Cease to Understand the World." It's by a Chilean author. He also wrote a book called Maniac, which I think is a follow up to ENIAC, not a crazy person, but actually some, shortened version of a crazy computer. The reason why I like this book, it follows, the key physicists and like these leading mathematicians and innovators in the history, and it sort of tells you how peculiar and unique they are. They're not normal people. They're not at all. They're not like your 9 to 5. No, like they're crazy. And I think what I really appreciate about that, Mike, is that a lot of the founders that we back have unique strengths. And if they had a sort of very regular, point of view of the world, I think they would do regular things. And so similar going back to like my Alibaba story, we had this like crazy English teacher, Jack Ma, who didn't really speak English that fluently, that wanted to change entire China by doing these large things. They're not normal people. They're dreamers, they're visionaries, and as a result, the sort of our interaction with them and how we understand them, how we work with them, also tend to be quite unique. And so this has given me an appreciation of the people, venture, like we talked about business models, companies, but at the end of the day, it's built by people and the founders. And I view this job as such a unique privilege of working with these unique people building an amazing, amazing thing that could change a world. And I think that's why this book to me is so meaningful, that, I get to work with people that are not normal, exceptional.
Love that. I don't think we've had anyone on the show mention these books. So
Yes.
you are truly an original, Bryan, truly original. So excited to add him to the newsletter and everything. But Bryan, this has been such a pleasure. Thank you so much for your time.
This has been so fun. Thank you, Mike, for the time. Thanks for having me.
And there you have it. It was a pleasure having Bryan on the podcast. Bryan, thanks again so much for coming on. If you're enjoying the show, I highly recommend also checking out the newsletter at theconsumervc.com. You'll receive all the latest news in the world of emerging consumer, and as well as be the first to know when a new episode drops. You can also, wherever you're listening to this podcast, whether it's on Spotify, Apple, or YouTube, if you can hit like or subscribe, that'd be amazing. Thank you for listening.